Greetings, brother teacher here. And what I want to do in this video is show you about entering and exiting trades, so you'll be familiar with that. So we got some action going on here. This is Ethereum. Actually, the S&P 500 market should be open too. But let's use Ethereum because it's going to get ready to bounce here probably about 8 o'clock. Now, understanding what's going on with these moving averages, all right? I'm try to keep this short and concise, but show you some good stuff. All righty. The ideally trade, and I'm going to end up writing this down, is you would like to have, in entering a trade, you would like to have the price above the green moving average or above the 5. We'll call these 5 and 15. Above the green 5 day moving average, and which would typically be above the 15 moving average as well. You would, or if you're looking to go down, you want price to be below the green in particular. These moving averages are telling you what the trend of price action is likely to continue to be for until it's not, right? Like it's literally that, until it's not. Like keeps going up until it's not, right? Now I use things like these Bollinger Bands to kind of give me an idea when it's going to start thinking about not being, but we'll get into that a little bit later. So let's look at what just happened here, literally after 5 o'clock, right now, live action. If we have been looking and watching this, somewhere at least about here, we had a good trade. Why do we have a good trade? Because price is below the 5-day green moving average, and the 5-day green moving average has crossed below the 15. So whenever you get crossing action, that means there's likely to be a good change of direction. How strong would it be? We don't know. That comes into factors like the time of day. So for example, here price cross, right? Price cross wasn't a good continuation. I mean, it did go up, but by the time you would have figured to get in right here, price was ready to reverse. Here price went down, okay, but there wasn't any continuation. Price started going up, all right? So what are we ideally hoping for once we get in that trade to know that there's some strength? We want to see sloping action. We either want to see a downhill or an uphill, right? When we see downhill or uphill, we are in business. Right here, what has happened right here? This is all downhill. And the best of the situation is when price is closing below the 5-day moving average. It keeps closing below the 5-day moving average. That's actually a sign that you should look to stay in the trade. When price starts to close above it, that's a warning sign. It's not necessarily an exit sign. If you have good, strong momentum, in this particular case right here, price was going down, was below the green right there. It bounced up off of the Bollinger Band interesting. And so it bounced up, but the slope on the 15 purple line was very strong. And so it just hit that resistance, as it is called. It's called resistance, meaning that there's resistance to go higher. It hit that resistance and turned around and dive. I think we're going to about 1410, somewhere in there. Typically about a little bit after 8 o'clock, there's a little bounce in the market. So we're going to enter a trade when that happens. So we could have been in this and been getting some downward action. How would you actually enter that trade? Now, you can do it this way. You can click on New Order. The default settings will be looking like this, okay? So you have your symbol here. You can actually change the symbol there, but whatever chart you're on, it defaults to that. You'll have your volume. In my trade example, I showed 0.05, okay? You can go as low as 0.1. So if you click on the drop down box, it has some preset ones in there, okay? So then you have stop losses. Stop loss means, hey, I'm looking for this price to go down, but it bounced up against me. And I had a stop loss at a certain point, and it went higher than my stop loss, so it closes out my trade. You have a take profit, okay? You have a take profit. So if you have a take profit, then once it hits the take profit, then you would get out. Let me see if this hits my target here, 14. Let's jump in here, this trade, 14. Let's do that. Do a sell. So if you want the market to go down, you're looking at a sell. If you want to go buy, it's buy. There's a spread in between here of about 3 points or so. So you have to get beyond the 3 points in order to start getting in profit. Let me get in this. All right. So again, what do we do? Down here, you see that we're in the trade. You see that we're in the trade. We entered a sale. Okay, it has a time, the order number. We entered a sale, it has the lot size, 0.01. Okay, symbol, price that we entered, 14.29. We put a target price in when we started. I didn't put a stop loss. A lot of times I'll just go back and do these afterwards, right? So let's say I want to put a stop loss in here. I would right click, modify the order. Right click, modify the order. So a lot of times I'm just trying to get in the trade in the beginning. So I'll then come back and put in my stop loss. Let's say I want my stop loss to be 1437. Just picking a number there. 1437. All right. And I already have my take profit in there. Got it. All right. So whichever one gets hit first, if it hits my stop loss, I'm going to lose a bit of money. If it hits my target, we will make a little bit of money. All righty. So that's how you get in a trade. Now, you also, if you have these arrows showing, some people did, some people didn't. You have these, or we can actually enter a trade right here on the chart. To sell, boom. We can use these arrows to increase the price, go up, go down, right? Like that. Okay. So let's go 5. And we can enter a sale, another sale. So you can have multiple orders in if you want. Okay. And then I can come to that order and I can do what? I can modify that order. It's already active. I can put my stop in there, change this 1437 like the other one, target 1414. All righty, let's see what happens with these. Okay, so we have a live trade going on right here, right now. As I make this video to show you how this works. Why did I enter this trade? You should know the answer to that. Hey, I'm actually late in entering, but we would have entered this trade because price is below the green. It's showing downward action. We're looking good. When you have strong action like this, a lot of times what you'll have is, let me blow this up a little bit for you so you can see, because this is really great. Okay. A lot of times what you'll have is prices closing below the 5 and below the Bollinger Band. This is, I mean, if you want to see something, you want to see that because that means it's strongly, the trend is strongly looking to go down in this case. And as you can see, once it hit there, it started. Now, sometime it'll start here, but then it'll reverse. Obviously, at some point, there's going to be a reversal. But if you get this happening right here, you're looking to jump in this trade, especially if the time of day is right. And then when am I looking to exit? That's important, right? When to get out. My actual trend system was called Trend God. Okay, it was called Trend God because of the power and force of it. And so when do you exit? Well, when I start to see price close above the Bollinger Band, and certainly above the 5, when it's been a strong downtrend like this, I'm going to start to look to exit. Okay. I'm going to start to look to exit. So that's how that will work, right? Ethereum's in a downtrend right now, so there's not a lot of up action. But if this, if my stop loss isn't hit, all right, You can see I'm in profit here at 0.05, $19 to 0.01. So at 0.01, you're making $1 per pip. At 0.05, we're making $5 per pip. So on something like the S&P 500, okay, we get net 10 points, we'll make $50 as I showed in my chart. If we only have 0.01, we would make $10, right? Now we're not here to make $10 or $50. That's one thing about this group, and this is about becoming a millionaire trader. A millionaire trader is someone who is going to be making in excess of $2,700 a day. So as you get this down, there's a psychology to deal with that when you do big numbers. As you get this down in your demo and you understand what you're doing, we're going to be wanting to use larger lot sizes, and that is going to be key for your psychology to understand when it's down. You see those numbers, and when it's down, you'll say, okay, I'm down several $100s. I'm down several $100,000. I mean, several thousands of dollars. You got to see that psychology, because when you're earning that much amount of money as well, it's very exciting. That's the goal, because this game, and wrapping up this video here, it doesn't care. It doesn't care. You can trade to make pennies, or you can trade to make hundreds of thousands of dollars. It doesn't care. The game plan is still the same. I can jump in this trade right now and be making $1,000 per pip. I can jump in this trade and be making $1 per pip. What makes the difference? What makes the difference is, I scroll this up here, what is your margin being used? What is your margin being used? That is the price to put on the trade. That is the cost to put on the trade, okay? So in this case, we have 0.06. 0.06 total cost us $85.95 to put this trade on. We have equity we have free margin of 4,853. Now, how does that benefit us? If you only have about $86 in your account and you put an $86 trade on, if this goes against you any little bit, like goes against you and you hit, start hitting about $90, it'll kick you out of the trade. It'll automatically liquidate you at some point, right? And now you will, let's say it liquidated you at $50, and you only had $86 in your trade, or so let's say it liquidated you at $56. Then you would lose $30. Now you see what I'm saying? So you have to have room for the trade. You can't just, you got to have money in there to allow it to breathe, if you will, up or down, or particularly going against you. You probably have more questions on that. You understand that, but this is key to understand. This is why I used the example of about $500, because in this case, we've got $86 in this trade. We got stop losses in place. We have, in this particular example, we have a 4-point stop loss. So if this went against us, 4 times $5 is $20 we would lose. In this example, if this went against us at 37, we ended at 29, or let's just say 30 for easy number. If it went against us, we would lose $7. Okay, that's what that means. If it hits our target, in this case at 29, or use 30 for easy math, we're going to make $16 here. Here, if this hits our target, we're going to be at what? 16, 17, 18, 19. It's about 20 times 5, which will be about $100. There's probably going to be some spread in there. Okay. So we'll be talking a lot about that if you don't get it all in the video right here, but you got to know how to enter that trade, got to know how to exit that trade. It's all free. It's all demo. You can enter, practice. How do you close them out? The quickest way to close them out when you have that one-click trading set is to click these right here. That's the quickest way to close them out. You can also close it out by right-clicking on the trade and click close order. You can right-click and click close order. Okay. You can highlight that, and the one that you want to do, close order. All right. So right now we're still in this, what time we got? It's 8 o'clock. We're probably going to get a little bounce here in a minute. And now you can see what is price starting to do. It's starting to, in another 5 minutes, if it closes inside of the Bollinger Band, that means this The momentum of this downside is losing a little bit momentum. It's losing a little bit momentum and it's starting to bounce, right? Starting to bounce and we're starting to lose money. We're starting to lose money. Okay, so this is good to see because we're losing money on this trade, right? And our target's probably going to get hit. And then we'll jump to, I'll show you a long position here. I'll pause the video and do a long position. So right now I'm still in these. I actually, stop just got hit. So we got closed out of those trades. Our stop was just hit. We got closed out of that trade. So you see how that works. So here, let's look at this. Okay, so what I just did here is you click on account history. It's showing you, I wanted to show recent trade first. So I click on here. And so you see we lost $22. Is this right? Yes. Where's my 0.01? No, it's not right. All right. You can switch these by type. Time. Here we go. All right, time. So I want my time of the trade, time that I entered the trade to be from recent to oldest. Okay. So now we can see these two trades here. We had a 0.01, it stopped us out. We lost $7.58. We had 0.05, we lost $19.90. So I just put those stops in there. I normally probably wouldn't have a stop, below the 15, maybe a little bit higher. But if we'd had a little bit higher above here, then we wouldn't have got stopped out yet. All right, because you're going to get some up and down action. So this video, I'm going to pause this right now and wait for an up move just so you can see how that will work.